Welcome back to Squawk on the Street. Rick Santelli here with my first guest of the week, Marc Summerlin. Marc, thank you for joining me.
Thank you for having me, Rick. It's a pleasure to be here.
You know, Jay Powell, a lot written about him over the weekend. He is, in my opinion, and I've seen many since 1979, a unique Fed chairman. What were your thoughts about his performance, his speech, and his general resume thus far as head of the Fed?
Yeah, I mean, I think you can only say that he's been very successful so far, and he is a very calm presence, a very reasonable guy, thinks outside the box, willing to consider a lot of information. I think when we step back and look at what he's done, by the end of September, he will have hiked rates 3 times. That equals what Bernanke did over 8 years. He's only too short of what Yellen did over 5 years. So he is continuing on with his plan. And not being distracted by all of sort of the noise around him. He did also tell us a little bit about his own personality in that speech, which I thought was very insightful, where he said, you know, he admitted that he was generally a cautious person and takes in a lot of information and acts very reasonably, but he does have a separate mode, and that is if inflation expectations get out of control in either direction, that he would switch into a much more aggressive posture. But then he cautioned that we weren't there right now, that there was no signs that the economy was overheating.
You know, Marc, when it comes to this president, the media and the president have a very strange relationship. And I think much of that can be seen in how the press writes about what the president says about the Fed. But many in the market, and many I rub shoulders with, think that it really isn't that big a deal. And Jay Powell seems very secure in his job and doesn't seem to take it as a threatening stance. What's your read?
Well, first of all, I think we're a long way from when LBJ called up Bill Martin, who was the chairman in the 60s, and told him that soldiers were dying because he wasn't printing enough money. I mean, so that is what real pressure looks like. I think that President Trump he has the right to make his opinions known. He is a former real estate investor, so it's not surprising what his opinions are on monetary policy. I think he is unhelpful to his own cause because when he is publicly criticizing the Fed, it makes it harder for them to stop at any one meeting. But, you know, Chairman Powell has made it pretty clear that it's not going to alter the plan overall. And Powell is smart enough to not get in any kind of name-calling.
You know, you just hit on something I think is excellent. What you basically are saying is that you don't think Jay Powell feels threatened by the comments. Much further from that, you think he's taking it in stride. But the president is doing himself in many ways a disservice, because it certainly sounds to me like Jay Powell is not going to speed through any damage caused by normalizing rates to the upside. Your final thought to that comment?
No, I think that's absolutely correct. I mean, I think, you know, Chairman Powell is in a steady as she goes mode right now. He's ignoring the president. He's doing what he needs to do. You know, President Trump has the right to have an opinion, but he's not helpful. It's not strategically the right way to go about it. And so I would just end it with that.
You know, one other thought I had while I have you, Marc, a lot is put on what the kind of normal rate should be. What is the neutral rate? Am I too presumptuous to think, along with many of my peers on this trading floor, that that rate will be the rate that makes the yield curve act a little stranger than it has already? Maybe various parts of the curve started to invert.
Right,
would that be your read as to neutral?
Well, I think there are two things there. You get information from economic models and you get information from markets. And one of the things that Chairman Powell also said was that he is not religiously tied to the economic models of the Fed, which is extremely positive development.